this business about Goldbach levels.
In this Goldbach strategy teaching, I'm going to show you how you could have got into an algorithmic long trade on Bitcoin and got yourself either a great return on a short-term trade or got yourself in a swing trade on this pump that I predicted. Now, if you go to my YouTube channel, you will see that I predicted the pump of BTC when it was trading around 37,000. So go have a look. It's one of my videos where I predicted that the target of Bitcoin would be around 177,000 when it was still trading in the bear market of $30,000. Now, I'm going to explain to you the trade as per Goldbach, what you could have taken last week, and this is the trade I took. Okay, so this is the Bitcoin chart, and it's very important whenever you are trading Bitcoin, you use the Coinbase chart. Okay, that is the true price. I also like using this indicator just to show me the imbalances. Okay, so it's called imbalance BC, and all it does is it just shows you the fair value gaps as a different colored candle. It just saves you the second, especially as I trade. I trade a lot, right? I trade Forex, I trade futures, I trade gold, I trade crypto. So, I don't spend a lot of time on each chart. So seeing the fair value gaps quickly really aids me in my analysis. Okay, and the indicator that I like is the AMD Power of 3 Goldbach Levels indicator. But let me replay the data or replay the chart to where the trade took place. Okay, so it was here. Okay, it was on Thursday. Okay, now we go to the 1 hour chart and I'll show you exactly what was going on. Now it's critical that you understand which power of 3 your asset is trading. So let's load up our indicator, AMD Power of 3 Goldbach Levels. Okay, and now I know that Bitcoin is running on the 6561. There we go. And this is the trade at play. Now, as you know, if you're a follower of my channel, the easiest algorithm to trade is Algo 2. And what Algo 2 does is it goes from the rejection block to the breaker block to the fair value, and then it terminates at the opposing order block. Right? Now, you have to give some leeway to the exact pivot points. The important pivot points for Algo 2, I would say, are really the fair value level and the opposing order block. We can get a reversal from anywhere. So this was the trade playing out, okay? Now, have a look. What do we see here? Now, remember what Goldbach is. Goldbach defines, using mathematics, what the dealing range of an asset is, right? So it would say that the low for this current price, when the price was at this level, the low of the dealing range would be here, the high would be here, and all these levels in between define ICT's PD arrays, okay, where they will form. So it says the rejection block will form here, the order block will form here, fair value gap, liquidity void, breaker, mitigation block, equilibrium, okay, and then we reverse. Mitigation block, bearish breaker, bearish liquidity void, bearish fair value gap, bearish order block, bearish rejection block into the high. So let's have a look. See how well Bitcoin was respecting these levels. So according to Goldbach, we would expect the bullish order block to form between the 0.11 and the 0.03, right? And what do we have? If we look at the bodies, there is your order block in the order block GB level. Okay, and what is this? This is your rejection block. Okay. Now, what do we have here? We expect a fair value gap to happen in the fair value partition. There is your 1 hour fair value gap. Then we have a liquidity void. A liquidity void is similar to a fair value gap in that prices are only being offered one way. However, you do not try to enter in liquidity voids. These are the fake fair value gaps that you sometimes get into if you only trade ICT and you're not aware of where the true fair value gap will lie. Okay, nothing here will be a fair value gap. They are just imbalances. The only true fair value gap is here, right, in the fair value GB level. So where would we come into our trade? Okay, we can very easily place a limit order and we can say we're going to come in here. And then maybe we want to put our stop at the low. And where would we want a TP? Well, we expect algorithm to terminate at the bearish order block. So we can say, okay, we're going to come off here. So let's play the candles through. So we create some liquidity. See that? We create some liquidity first. And then we fired into the fair value GB level. We are now in the trade. Now, look at the candle bodies. Ignore the wicks. Do you see how they stay within the fair value level right here? There we go. Now we take off past equilibrium. So we bought in a discount and we are going to sell in a premium. There we go. TP. So a nice 2.9R trade. And of course you could have held as a swing trade. Looks like we're about to take the all-time high of Bitcoin. Okay. Now this Goldbach is the price component of Enigma. It's important to understand the time component, which combined is my golden bullet time and price strategy, which I use for Forex, index futures, crypto, gold, silver, pretty much anything. If you would like to join my mentorship and my monthly Discord server, there's a link below. If you have any questions around Goldbach or time and price in general, feel free to leave a comment, and also feel free to follow me on Twitter if you would like to see more information on Enigma, time, price, and how I trade.